Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Tasty Bites Eatables, a very interesting share which I believe can be a multi-bagger over the next 4-5 years. So let's understand how the valuations are and what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Tasty Bite Eatables, here's a small request that kindly support me through Patreon. And once you do that, I'll be able to get more mileage for the YouTube channel, and I'll make more interesting videos on YouTube. And once I have more than 100 patrons, I'll start with an education course on investment at YouTube without any extra cost. Plus, I write 2-3 articles every week on Patreon on different stocks as well as markets, analyzing different stocks with short-term and long-term targets. So have a look at my Patreon sites, and I hope you'll like it. Now about Tasty Bite Eatables. This was established in 1995 when they manufacture a number of ready-to-eat items, that is packed food materials of Indian brands. So you have packed curries, you have packed sabzi, other kinds of products like halwa, etc. And they market these products into USA, Australia, and many parts of Europe. So people there who are based out of India and settled in these parts of the world are very fond of their products, and they remain quite fresh for a longer period of time, and people take home these products and probably heat it in microwave and on gas and use it for eating. And they have a very big market with respect to the kind of business that they're doing, especially in United States. Serves most of the authentic Indian foods which are packed, and the market cap of the company is around 3000 crores. It is a slightly illiquid stock, so you have to be careful about it. So probably bid and ask price have a lot of difference, and very few stocks gets traded, but the company is extremely robust and the results have been robust, which I'll discuss now. So if you look at the financials of the company and compare it between December 2020 to say December or FY19 and December quarters, then you'll see that the sales have increased by around 31%, whereas the PAT profit has been over 95%. So a 7 crore net profit or 6.9 crores net profit of FY19 December has culminated into a net profit of 13.7 crores for December FY20. The debt has reduced over the year, and there's high promoter holding. The return on equity, as you can look at it, is around 26%, which is higher than the industry average, and the operating profit margin is around 11%. One thing needs to be noted that since its business is in United States, so it's going to suffer with the kind of business environment that currently lies in countries like US and Europe. So it's going to get affected, and that's why the stock fell sharply. So if you look at the performance of the stock remained flat. So if you look at a 2 year period, then the stock is absolutely flat. It was around 8,000, 8,500 some 2 years back, and it is around 9,000, 8,500 right now. But it had done well up till say 2 months back. So over the last 1 month, it has nosedived. So it went to 13,000. So it was giving a good 50-60% profit over a 2 year period. But then the news of the virus spread and many other things came about, and we have seen what has happened. So the stock has completely nosedived in the last 1 month, and they have produced very good return ratios and numbers, but the stock has fallen something like 40% from the peak. Consistent growth on the top line and the bottom line, and currently trading at 50-55 times, you would think that it is expensive, and you will also think that such companies should not trade at 55 times, but it was trading at 80-85 times easily for a longer period of time. So at 50 times earnings, it is quite reasonably priced, and one can look at the stock at these levels. So why I believe it is a buy on decline? Well, first of all, it has fallen something like 45% in the last 1 month from the peak. Yes, it has gone up from those levels, so around 6,800, 7,000, 7,300 levels. It has already moved up by around 15% as the markets have moved up. But even on slight declines, so these are very good levels to get into. Why I say that? Because it is the only company of its kind that is listed in the marketplace. It is not that there are other companies of such sort that is listed. Plus, the business that they have is quite monopolistic. So, this is a very high barrier to entry business. You cannot get a lot of, you can say, uh, a lot of licenses to work in or to sell food products in US and Europe that easily, the way Tasty Bite has been doing over the years. And it has been over the last 20 years that the company has been selling the product and expanding into these markets. So it's very hard for other companies to get into such markets, or to establish itself. Even if they get into such markets, it will be very difficult for them to compete against a brand like Tasty Bite. Their products are pretty renowned in many parts of southern part of United States as well as in New York, etc. But again, the problem that has taken amidst across say US and Europe would have a definitive effect uh, on products of Tasty Bite, and probably the next 2 quarters would be difficult. In that regard, whether the market has priced in the valuations at 7,000 rupees or not, we don't know. And that's why I would suggest that any 10-15% decline from current levels is a very good buying opportunity from a 4-5 year time horizon. So kindly look at the stock in that regard. The near term pressure that remains with the global problems will continue, but over the next 6-8 months it's going to come out of all of this. Low debt and a high promoter holding is also a positive, so the company is not having a lot of debt. There's over 60-65% level of promoter holding, plus FII and DII holding of some extent. And this is one of the marquee global consumption stocks. So when we talk about consumption, we talk about HUL, Dabur, or in the mid cap arena, something like a Britannia, or for that matter, a DMart, a Dixon Technology, and TTK Prestige, and many others. But there are very few global brands, such as Godrej Consumer is a global brand in which it sells its products across Asia as well. But here you have a stock that is selling its products mostly in Europe and US, and I believe that it's going to do very well over the next say 6-7 years if one get invested into the stock at these levels. So if you look at the technicals of the company, then there has been a mega fall that has led to most levels, or most you can say short-term levels being taken out. So it is not that the stock is in a severe uptrend; it is in severe downtrend. 7,000 levels is a strong support. Then there is a very good support at around say 9,000, 8,900. One has to look at that. The resistance is around 10,000, so which is the 50 DMA. So it is trading around 9,200, 9,300 levels. Uh, if it goes to around 10,000 and then comes back, then very good levels to get into is around 8,000 levels. The 200 DMA is nearby at 9,100. It is extremely weak on charts. The strong support lies between 9,100 to 8,800. Currently it is trading at 9,250 if I'm not wrong. And on a long term basis, the support lies is around 7,000 levels. So what needs to be done? Probably you can buy on major declines and keep adding on dips. This is a good 5 year play, and it can become a multi-bagger. It can easily be 3-4x from here in the next 4-5 years. Once the global economy comes back into picture and everything else moves nicely, it could trade at 80-90 times. One has to take that into consideration. So this was my video on Tasty White India. Thanks a lot for watching.